Good morning, everyone. Thank you for inviting me to share a few thoughts with you on what this pandemic has done to us. In fact, COVID brings to mind many things. One of them is something that Warren Buffett once said that you might recall, something that may resonate more with our tourism-based economies and our sandy beaches and clear waters than, in fact, with his own home in Nebraska in Omaha. He said, and I want you to remember this, you only get to see who is swimming naked when the tide runs out. My friends in the banking sector often press me about making government smaller, but it is only in a pandemic that you see the critical importance of a state, of a nation, that can step in and fill the gap. Others constantly complain about the attitudes of public sector workers, but it is only in a pandemic that you see the critical importance and their commitment to duty, whether it is sanitation workers or nurses, police officers, customs officers, supermarket shelf stackers, those people who regrettably have been relatively unappreciated in our societies. Some avoid public schools and complain about trendy teaching methods not being available. But it is only in a pandemic that you see the critical importance of a public educational system and new curricula that teach people how to understand new, complex and uncertain things. Some recall and tell us that you need to turn to the health in the private care system. But it is only in a pandemic that you see the critical importance of the public health systems that can still reach and treat all. Pandemics, my friends, are about the behavior of others, which means the behavior of all of us. It is only in a pandemic that everyone appreciates the critical importance of investing in the local community and in the broader society. Banks play a critical role in our community and society. And hence, it is important that you reflect on these topics in the midst of this pandemic as you are doing. You channel savings to borrowers, you connect us. And for the most part across the region, you have stepped up to the plate in this tough crisis and played a responsible role, a caring community role. You've applied reasonable, sensible forbearance. But I want to remind us that we're not out of the woods yet. And banks have an extra social impact because of your systemic effect. One bank doing something like holding a late paying customer to account or foreclosing on a mortgage that has been defaulted may be sensible from the bank's perspective, but all doing the same thing at the same time can be counterproductive and can implode our economy, our society, and indeed the very same banks. Pressing for early payment of arrears could endanger the recovery. And the time for restoring order to payment schedules, I'm sure, will come. But the forbearance, I suspect, we need to continue for a while longer. I want to thank those that have done that. And I want to say to you that that has made all the difference in the lives of so many enterprises and so many households. And why? COVID, my friends, has hit our economies truly hard. Harder than most because we are travel dependent. Of the 20 countries in the world hardest hit by COVID last year, all but one are small developing economies. Our strategy in Barbados has been to build up a war chest of reserves to ensure that we can make all the right health decisions and not have to worry about how they will be financed next week or next month. And that has worked. Today, our reserves stand at a record $2.8 billion, or over 41 weeks of import cover from our normal 12 weeks. Or indeed significantly up from the 4 weeks of import cover that we inherited when we became the government. In the current environment, the only way to do that, and to do that sustainably, is in fact to borrow. But the key has been to do so at non-commercial concessionary rates. So whereas the government of Barbados was borrowing at over 10%, almost 11 in fact, 4 years ago, our IMF loans today are at 1%. Our World Bank loan, is not far off. And the recent allocation of SDRs, if we were to draw down on them, are at a rate of 0.05% with a flexible maturity. Our intermediate strategy has been to hold the economy until the international recovery comes to avoid lasting damage, because we are large enough as a government to do so. The front line of our response has been our national insurance system, which has paid out over 160 million Barbados dollars since COVID began. The government and the central bank have played a role in ensuring that they can get the liquidity, that is the National Insurance Fund, can get the liquidity that they need. That fund is a $4 billion fund, and the actuarial report points to its near-term solvency. But we know that this was a big shock to the system, and we are looking at ways to recapitalize it over time so that it will continue to stand ready for the next shock that we may experience. And yes, COVID was that unusual shock, never before imagined. And we also had to develop on the fly new benefits, like a business cessation benefit. And indeed, what we now call the BEST program, which is designed for tourism and hotel properties to ensure that workers and families did not fall through the cracks, while creating opportunities for transformation of the tourism sector through encouraging them to invest in green projects, digitization, and being inclusive to reach out to other sectors across the economy, like persons in manufacturing or agriculture, or indeed other business activities, so that they could also benefit from the presence of the activity within the tourism sector. We have also used the moment as best we can with the National Transformation Initiative, recording tens of thousands of Barbadians taking up courses that were offered for free. We continue to invest in a more diversified economy and invest in nutrition, food security, climate resilience, independently, of course, of tourism. And if ever we understood the need for economic diversification, it has been in the last 21 months. We have to ensure that we do not find ourselves in this position again. And we want to encourage and support the private sector to invest, therefore, in new and unfamiliar areas that will allow for this kind of economic diversification. We do so cognizant that we have attractive tax rates. And we are also recognizing that even as we respond to the challenges of a global minimum tax rate, that we must find ways of being able to ensure that we do not destabilize our societies by losing as much or compromising as much as 13% of our revenue with respect to corporation taxes. My friends, it has been tough, but we have been working 24/7. And still, we're not saying that we have done all that we would have liked to have done, or to be able to reach all that we have wanted to reach in terms of people. We continue to watch the developments closely, and believe you me, we try to respond as best we can, because there is no playbook for this pandemic. But let me turn my attention to banking. I ask you to recognize that banking is part of the information technology industry. We would not need banks if we knew where all the borrowers and savers were, and we had the technologies to fund and match them. And because it is part of the information technology ecosystem, it is in constant flux, buffeted and aided by innovation. The banking model follows the regulatory model. For many major banks in our region, the regulatory model that impinges on them is not just ours, for they also must follow the regulatory model of their home jurisdiction. In many instances, it is Canada. The journey of the international bank regulatory model has changed banks beyond the recognition of our parents and our grandparents. They simply would not recognize them. 100 years ago, banks offered primarily short-term loans to businesses funded by deposits, really uncollateralized loans to firms. A mortgage that went beyond 5 years was rare. But the advent of capital regulation for corporate risk, and later the preferences put in partly for political reasons for home ownership, banks switched out then into collateralized lending for mortgages and car loans. Uncollateralized loans were offered at high interest rates through credit cards. And now, despite record low deposit rates, the further ratcheting up of capital requirements following the global financial crisis has pushed banks to focus on fee income and not on interest rate margin. My friend, banks have moved to offer firms capital market advisory services for a fee rather than for loans in the developed world. That's where they've gone. And for some banks, deposits have moved from a cost of funding, a near zero cost of funding today, to a source of some steady income through the implementation of fees and charges. This model makes some sense in the developed world, where firms can initially go to the venture capital markets and the equity markets when they mature. But it doesn't really make as much sense here in the Caribbean. Because of our size and the narrow ownership of firms and their capital, we will never have the liquidity that the capital markets in the developed world have. So our economies are more dependent on the banking system. The reduction in business loan to deposit ratios to levels below those in economies with similar risk can hurt these economies. Indeed, the reduction in low-cost services for small retail depositors hurts us too, so that there are really few other places that our customers can go. And therefore, it is a great pity that the removal of the minimum deposit rate did not lead to more lending, as it was argued at the time that it would do. It resulted in less. It is a pity too that in my own country, for instance, our banks have abandoned the low-cost Caris ABM network for an alternative system, which we still do not know what is the precise cost of it, or even if it will guarantee that the cost will be lower for the consumers than it was under the previous system. The current level and uncertainty around charges and fees is unacceptable and should not stand. So we need your help to put banking back to the center of our economies, helping to drive investment, economic activity, and customer service. We don't want you to be skeptical, passive bystanders with shrinking influence, but we want you to play a leadership role in our community and our countries. There will be those who will be thinking, well, then don't restructure your bonds, or don't have high reserve requirements, or don't have a bank asset tax. But I say to them that everyone shared responsibility in sustaining this unsustainable situation. That's the only way we can do it. We share the sacrifices and we share the bounty whenever it returns. The reality is that some have benefited for too long a time from levels of interest rates that far exceeded those in many other places where they were clearly not sustainable. Like all regulators worldwide, there are things that we are being pressured to do, like look at the return to a minimum deposit rate, like dealing with the cap on fees. And you know that we have already expressed our concerns, particularly on the issue of fees, particularly for minimum deposits, as well as also now for large deposits, which comes to affect in particular the credit unions whose deposits are kept within the banking sector. I hope that we can solve this through dialogue, but I've also served notice that if we can't, then we may have to look at using legislation in order to be able to provide the caps to ensure that we protect the most vulnerable in our societies from practices that really are not fair. For our economies have taken the biggest hit that they have taken in the last century. And the truth is that we cannot encourage a level of passivity that will ensure that we do not rise to the occasion and invest in new businesses or expand in existing businesses, even as we seek to come out of this protracted pandemic. The truth is, equally, that the distance that we've traveled has been difficult for some, but it's uneven. A third of our economy has gone to naught. Another third was unaffected. And a third has had to adjust and adapt, and they did so. But the third that did okay, the international and business financial services sector, many of our banks in fact avoid. That industry complains bitterly to us that after passing all of the AML hoops, they still face much reluctance. Big, well-established international businesses find it challenging and slow to open local accounts. And indeed, so do ordinary consumers, which causes us to worry about those who we leave unbanked and outside of the commercial system as if they were pariahs. My friends, if banks do not like the risk profile of uncollateralized corporate loans, then let us use your skills and experience and come together in a diversified consortia to help establish crowd financing platforms, factoring platforms, venture capital platforms. Suppose you don't want to work together, then do so with savings institutions like pension funds and credit unions. We simply have to think outside of the box, for we know it cannot be business as usual. We will help to create the appropriate regulatory regimes where necessary and where appropriate. And we will consider partnership and co-investment if that is in fact the route that needs to be pursued. We want our banks to make reasonable profits, and it will cause you to invest in the market and remain safe. No regulator, believe you me, wants desperate banks. Many emerging markets with our levels of income per head have many profitable banks. The space that banks used to occupy is narrowing with the advent of new technologies and non-bank players. And yet still, we understand the difference between technology players and banks we authorize to accept deposits and to make loans. Money is based, we all know, not on payment systems, but on credit and loans. And banks who do that will always be central to our economy. In the space of lending, new spaces, my friends, are opening up, and new opportunities exist in some of the traditional spaces. We encourage you to grasp these opportunities, to explore new initiatives, and to consider governments as your partner in exploring these new areas. And why? Because our region faces its most difficult challenge since becoming independent countries. If we thought the pandemic was bad, then the climate crisis will present significant challenges to us. And it is for that reason that we have to make sure that the entire society adjusts its heads for the adaptation that must take place if we are to withstand the challenges that will be presented in this existential crisis. I believe that we are up to it, but I do believe that there has to be a recognition that it cannot be business as usual, and that there has to be a recognition that we will always be stronger working together, planning together, and ensuring that there is equity in sharing the burden, because without that shared burden, our societies will not move forward in an equitable way. And we all know what our history was, where the level of inequity was literally oppressive and tyrannical. I have every confidence that banks operating in the third decade of the 21st century in the Caribbean will understand that their role has to be an engine of catalytic growth for our economies, for our consumers, for our businesses. And if we do so, then we shall weather this pandemic and present ourselves as fit for purpose to meet all of the challenges that may confront us. I wish you all the very best in your deliberations. Thank you very much.